All right. Let me turn off this royalty-free music, YouTube. Royalty-free. It's royalty-free, YouTube. Anyways, good morning. Yeah, I got to start early today. Hope you don't mind. Thank you for being a subscriber of Forex.Today, the YouTube channel. More than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne, but you can call me Wayne. Let me know how it can help. Technical analysis, fundamental analysis, all that kind of stuff. Just let me know. I have about 20 years of experience trading Forex. And hang on, I heard something pop up over there. I guess I need to... Anyways, yeah, so let me go... I heard something go beep. Anyways, yeah, I have 20 years of experience. So I've seen a lot of things in Forex. That's great. So let me know how it can help. I also went to Harvard in my 40s and got a macroeconomics degree, not a certificate, not an online class. Yeah, a degree in macroeconomics and a master's in financial management. So, you know, I could borrow from some of that textbook knowledge as well as my 20 years of street knowledge. I'm willing to share, so ask questions. In the description below the video, there's a link to my book. And yes, I'm going to write a new book. Figure every 10 or 15 years I should write a book. Yeah, I'm going to write another book. But that one, if you've already read it, please visit the Amazon website. The link is in the description below. And leave a review. Even if you didn't like it so much, leave a review. I appreciate your feedback. I'm not a professional writer, but I write pretty good. I write good. It's real nice. So anyways, in the description below, there's also links to training videos. About $1 an hour. If you join FX Bootcamp, you can also join our live trading groups. The swing trading group and the day trading group meet today. Both groups met yesterday for the stop, look, and correct session. And now both groups are meeting today to plan out the rest of December. Yeah, I know, right? Sounds pretty good. So feel free to visit FX Bootcamp and join. Also, we all need brokers. There are different models of brokers. I'm not sure if you know that. There's different models that they can use, different methodologies for trading. One of them is to manage the book and offset, your clients that are long against clients that are short, and anything that's not offset within your own book. Then as a broker, you can then take the opposite position of the remaining, which is essentially a market maker type model. Now, a lot of people feel like this is brokers trading against them. That may or may not be true, may not necessarily be true. Now, they could, but it's not necessarily the case. They make a market for the market that doesn't exist inside their own realm. So think of it, it's kind of like there's the internet and then there was AOL. Do you guys remember AOL? For a lot of Americans in the beginning, it was their way of getting onto the internet. But you just went into this world, which was AOL. There was no other, right? You didn't go out to Google. Google didn't exist yet. So you would log into AOL, and the internet, as far as you were concerned, lived inside of AOL. That's sort of like a market maker type model where when you go long on a trade, the market maker model then says, okay, this trader wants to go long. So they look inside their own client pool and say, let's match them against this other client that's short. Okay. And that takes care of almost all the trades. But if everyone is long, then the broker can say, well, there's no one to offset these long trades, so we can take the short position. And it's kind of like trading against your client. It doesn't have to be, but that's kind of what it looks like. That's one model. Trader's Way has a different model. They're not market makers. So they have a different model in which you say buy, and they send the buy order into the interbanking system. Done. Straight through processing. Boom, boom, your trade's gone. Out into the bar. And the liquidity pool matches your trade. There has to be a counterparty to your trade. So anyways, that's how Trader's Way works. So if you like the ECN straight through processing type models, well, Trader's Way has one. They're a boutique firm, which means there isn't 50 million people on one server. So their execution speed is fast. They actually pay you swaps. There's lots of asset classes. Oh my God. So tradersway.com, check them out. I think you might be happy. Happy! Okay. It's hot today in Africa. Marina says, my first book was great. Thank you, Marina. I appreciate that. I really do. Cool. So what's going on in the world? Look, I'm assuming you already have followed the speech and you've done all that. So let's just, I just have to imagine you've already analyzed and listened to other people analyze what Jay Powell said yesterday. It would be ridiculous for me to talk about it now. So let's talk about something much more interesting. How has the world changed? So yesterday, 24 hours ago, I showed you how to use the FedWatch tool. So here he is again. See, I can write good. Yesterday, this was, if my mind is correct, if my memory is correct, this was 66%, and now it's 77%. Is that dramatically different? We went from 2/3 to 3/4. Is that really a big deal? Not really. Some people are still betting on going on the big. If this group here, if this crew here is correct on the 14th of December, they're going to make money because the market's going to move. And my assumption is they are going to sell oil, sell gold, sell Bitcoin, sell the S&P 500, and buy dollar. That's what this crew is doing. Now, when you look at these, when I show you this chart here, this graph, do you see all of that? That's what you're supposed to be doing. So I spend a lot of time on this in the day trading group. So if you want to learn how to trade a little bit smarter, join FX Bootcamp. Because it's not even, okay, it's it's not this versus that. It's the change. All right. So does anybody have the FX Street link to the article I wrote over the Thanksgiving holiday? I think it's here. I might have it. I do. I got it. G'day, Adam. How are ya? How's your mum? Oh, no. My delete key popped off again. Come on. All right. So what I said here, all right. Do you have any favorite leading indicator? Do you have a favorite leading indicator you use to address potential NFP outcome? The only leading indicator is the FedWatch tool for analysis of capital flows between banks in the Fed funds futures market. It derives from the negotiated interest rate in smart money negotiations. See? Huh? I had to write this quickly. I apologize. The data shown are simply based, the data shown are, how would you write that? Data, is that plural? The data? Is it the data is simply based on the bond math between yield and price? Yeah, I probably should have put is, but R might actually be correct. Anyways, when you read there's a 78% chance of a 50 basis point hike in December, check this out. I wrote this a week ago. It's 77%. Ho, 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 ho. Wee, wee, wee. Yeah, it is early. Hey, good to see you, Johnny. So anyways, the Fed funds future market is where they get that information. Here's what I'm trying to get to. However, I like to watch how it changes over time as an indicator of cash flow, not just the number on one particular day. Look at that, giving away the goose that lays the golden egg. It's all right, because one thing I've learned, nobody listens to me. It's okay. It's okay. After doing this for 20 years, one thing is faux show. Nobody listens to me. So anyways, so when you break it down, it's really how these things have changed since the speech yesterday. And there has been dramatic changes. And if you're in the day trading group, you know how those changes impact the value of the dollar. You're welcome. Okay, so anyways, look at gold here. I will do this in sort of orangey, ugly orange. Nah, orange isn't right. We'll do black. There you go. Black cat, 9 life short days, long nights, living on the edge, not afraid to die. Yeah, if you can't quote Janet Jackson, who can you quote? Okay, my WTI, there's the day trade. That's a simple day trade. See, it's on a 15. That's the day trade. Yeah, hey. Pretty simple. The only question is, what's the take profit zone for today? It's between $82.71.5 and look at, they overlap perfectly. Interesting. And $83.10. 35.5 cents. So, but my chart is telling me is if you get near 83 bucks, you should probably take profit. And we're at 82, so there's one more dollar left, but the buy zone was 80. So it's a $3 day. That's a good day, son. That's a really good day. Don't let it get away. It's a beautiful day. Please, my love, you know I'm not a hopeless case. Yeah. All right, so what's going on here? We had a change in direction, so I got a change on my biased pivots for now anyways. Okay. So once again, you will learn that this is a day trade, this is a day trade, and you're already working tomorrow's day trade because you is smart. Good morning, Coach. Could you please explain why 23% start buying the Dixie? Are you talking about the Fed Funds futures market? That has nothing to do with the Dixie directly. No, that has to do with the price they negotiated in contracts. And why? It's their opinion. But the thing is, it's a negotiated opinion. But dollar is weak. And it's supposed to be weak. So I'm assuming you're selling dollars, right? Like we're looking at Bitcoin versus dollar. Nothing says down. Nothing. There's absolutely no indicator here that says down. So, right? So to go through here, this is a day trade. That's the target. This is the day trade. That's the target. This is the day trade, and the target's just a little bit above. Nothing says down, so I'm not sure what you mean you're on dollar. But be careful. And also what I was showing based on the change in the Fed Funds futures, is it still around? Okay, let's go back to today, or the current one. And I explained, this was 66 and now it's 77. That's absolutely, totally, unequivocally not long dollar. Anyways. Are you guys coming to my... Oh, look at that. They link it to the image. How funny. Why don't they link it to the event? That's pretty funny. Maybe it was a mistake. Are you guys going to come to non-farm payrolls tomorrow? Living on the edge, not afraid to die. Huh? Let me get you the link. Cool. What do you think of that? With bells on. Cool. Right on. This picture's funny. Will it let me go in? That picture, I'm actually leaning against the building that FXCM used to be in on, I think it's Water Street, which is a couple of blocks away from Wall Street in downtown Manhattan. And I pinged them. I pinged the boys that were over there. And I'm like, hey, I'm going to be in town. Do you want to get together for a coffee? And they're like, no. I'm like, what? I think it was Daily FX at the time. So I'm like, I'm in town. You want to go grab a coffee? Just Forex guys. And they're like, no. No? That's rude. Well, there's a little backstory that explains the rudeness. But anyways, we don't need to go into the backstory. But I was still surprised. I'm like, really? So anyways, I'll never forget it. So I show up there. That's the building. It's right. And I have a camera crew with me. Yeah. And I want to take this shot. Oops. And it's me on Wall Street, essentially, leaning against a building. And we got out and they set up lights and the reflective mirrors and all that kind of stuff to get the lighting. See how nice the lighting is there? And I got my beautiful, suit on and everything. And we start a photo shoot. Photo shoot, right? And so anyways, a crowd forms. They're like, is it Brad Pitt? Is it Tom Cruise? No, I think it's a male supermodel. So this crowd is forming, like no joke, 50, 60, 70 people are formed in this circle while the camera crew is taking photos, right? Try this and try that and lean this way and look mean and look happy and look sad. So I'm doing all these poses. And sure enough, the two guys that said no, they don't want to have a coffee with me, they walk by me carrying coffee from Starbucks. They're walking by and they're like, is that Wayne? I'm like, what's up, fellas? Hey, I could have bought your lattes for you. Anyways. So that's funny. I always look at that and I think of that. I think of me watching the two guys that said they didn't have the time or the need or the want to go for a coffee with me. So instead, they walked past, right? A crowd of 100 people. And I'm like, uh-huh. So anyways, in my mind, it's super funny. Super funny. Okay. So anyways, we look at that Fed funds futures market and that, what does it say? Gold up. Well, no, the company went out of business and then they sold the Daily FX website to somebody else and now they work for somebody else. So anyways, I thought it's still in my mind. It's one of those funny moments that you still remember because they're walking by holding their lattes going, what the fudge is going on? Is that Wayne? And they're just walking by and you can see it like in slow motion. Is that Wayne? And I'm like, there are a few. It's a Tarantino movie. This is just funny. Gotta love what you do. You gotta love your life. You gotta make precious moments like that. All right. So anyways, that speech yesterday moved the Fed funds futures market in such a way that gold goes up. It's just nothing interesting about it. the big thing is, if you don't understand, why are you depriving yourself of useful information? All right, cool. So anyways, it'll affect Bitcoin in the same way, but notice that just because it's going up, there's a reaction to news, but then people wake up and they're like, wait, I don't want to own Bitcoin. And things eventually change. And that's the difference between technicals and fundamentals. By the way, both are correct. This is definitely going up. There's no reason to sell it. But that is likely to change sometime in the future. And that would be an opportunity for those who are bearish. That's all. If you were a bear before the speech yesterday, you're no longer in the trade. You probably took a loss. So what? Get over it. What's the big deal? Oh, well, Wayne, I put 2/3 of my trading account on that one trading idea. Well, then you're foolish. That's all. Degenerate gambler. Cool. The house always wins, by the way. It's just a matter of time, isn't it? If you're a gambler, you have to understand, eventually the house wins. A friend of mine who's a mathematician and engineer, he got his PhD from Johns Hopkins University, and his thesis was on new methodologies for building foundations for nuclear power plants. So he's a smarty pants. He's now retired, a multimillionaire. He hasn't worked since he turned 40. I got a lot of friends that are in that case. Retired at 40. Yeah. Anyways, he used to do something where he would walk in when he was in Vegas, or really, I think it was South Lake Tahoe, because he'd go skiing. And there was two ways to have a vacation. One, have a high roller vacation where you splurge. The other one is a low roller where you're lean on your vacation. You stay in a small room. You don't have big dinners, and you just lay low. You ski and then you drink cheap beer at night, right? So that what determined the way he vacationed was he would walk into a casino in South Lake Tahoe, and he'd put we'll just say $1,000, and he only had one chance. And to make sure he did this, I don't know if you know South Lake Tahoe, he would double park his car on the street. There's not even a place to park. You had to actually climb a 3-foot wall, go over sort of a barricade that kept, people walking on the sidewalk. So the road was 3 feet below the sidewalk, right? So he'd pull up, okay, put his flat parking bleep, 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 climb up over the barricade, run in, put $1,000 on one hand, and if he won, he's going big. If he lost, he's going small. Run back out of the casino, hop over the fence, get back in his car, and go. Mathematician, huh? Because the more hands you play, the more likely you're going to lose. So his best odds, one shot. So anyways, that's not the way you should be trading. So anyways, if you want to be a bear on this, I get it. The bear zone is up here, by the way. So you could get one of these things. And that's what a bear should be waiting for. It could be now. It might be later. And you wait. Or if you want to be a fancy pants, who here wants to be a fancy pants? Well, then you just keep trading the technical until that stops working. And then you're going to trade the technical the other way. That's all. Oops. I hate when that happens. Hang on. Now I got to put all that back. There we go. I guess that wasn't too bad. Should be a lock on that feature. Hang on. I'm trying to find something. It's probably this that's beeping. Boo, 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 boo. Yeah, I think it was. All right. So anywho, by the way, do you like this time of day better? Eurozone unemployment rate only 6.5%. Wow, huh? German retail sales negative 2.8. Amazing, huh? Was that right? You guys prefer earlier, huh? All right. All right. I'll consider that. So you can see we're pretty steady here. This going up is bad. Because this is people applying for unemployment benefits. Okay. So that doesn't show troubles yet. Today we have manufacturing ISM. Okay. Make sure you look at the employment subcomponent. Okay. And probably orders as well. You can see Europeans are getting jobs. There's less and less. Can you imagine a year ago, in the Eurozone, it was 8.5% unemployment. And now it's only 6.5% unemployed. That's still a lot. It's 2.3 in Japan. But part of it is described through an economic choice. I mean not economic, but economics. It's a choice of economics. So it's hard to get fired in Europe because they're a little bit more socialist pig dogs than a capitalist pig dog. So if it's hard to fire somebody, you're slow to hire new people. You see the logic there? So when employment improves, when the economic conditions improve, you don't want to hire people. You're slow to hire. Where in America, you just hire and fire. We love you until profits fall, and then we hate you. I have a gold watch somewhere, and it's a Tiffany watch, gold watch, and it was given to somebody. They worked at a railroad company for 50 years and then retired. I gave him a watch. Then I think he died and his wife sold it on eBay for $50, and now it's mine. I thought I had it here. I don't have it. Oh, maybe I do. Huh? Well, anyways, the box. No, this was a bracelet. No, this was a pearl bracelet I gave my wife. But anyways, beep. I think I can sell that on eBay, can I? The card. Oh yeah, look at that. But no, I got a watch somewhere. So anyways, it's that's sort of the American way. Hey, thanks for working here for 50 years. You're fired. We're in Europe. All right. So anyways, the consequence of not firing people quickly is that you're slow to hire. So if you're slow to fire, you're slow to hire. So maybe employment's stable, but you're stable at a higher level. You're not as flexible and nimble. And that's just a choice. It's not bad. It's not good. It fits in their model of capitalism. We can quickly look at German retail sales, huh? A little bit volatile. Yeah. Huh? Here's ADP. Another dumb prediction. Can you tell where COVID occurred? Yeah, pretty amazing, right? Take a look at next week. Okay. Australia, Australia, Australia. Are they going to jack up interest rates? They're kind of behind the curve, in fact, right? But remember, I asked you to follow, and I think it was this week, Australian real estate numbers, because that's starting to weigh in on the RBA's ability to continue raising interest rates. We're also very sensitive to the news out of China. That's coming out on Tuesday. So Monday's a big day for Asia. Then Tuesday, right? It's actually kind of the same, isn't it? The same day? No, it's not. Then the next day, Aussie again, plus China news, which is also Aussie related. So we go Aussie interest rates, Aussie GDP, and then the value of the Aussie relative to good or bad numbers coming out of China. Okay. Then Bank of Canada on Wednesday. So all this means is get ready to trade commodity currencies. Canada is way behind. The Canadian dollar's been crushed lately, huh? Amazing. Okay. Next Thursday, probably get some bad CPI data out of China, which is going to impact the Aussie. And then some more bad news out of England. Okay, so translate that for me, Wayne. You should probably start paying attention to Aussie. Okay. Oh, my darling. Oh, my darling. Oh, my darling Clementine. Mm-hmm. Oh, come on. It's weird that they bury that, huh? All right, Ashish. Job cuts soar 127%. Okay. This is obvious. Again, I've shown you valuation models relative to interest rates and relative to really opportunity cost. That totally makes sense. Okay. And so I wrote 5 or 6 years ago an article on how to create a model for predicting the headline number for non-farm payrolls. I put this in my model. Most people don't. Okay. That's all. She says 127%, but even better, it is 417% higher than a year ago. Cool. Okay. Cool. Check out ZAR. Okay. Whoa, dude. Well, market conditions, okay, don't seem to explain this. So this is most likely South African. Maybe it's a hot day and the power went out. Okay, Polish zloty got killed too. Polish zloty got destroyed today. But it seems to me the spread is actually narrower than typical. I would look at this differently. See, I don't look at spikes. I don't look at this. I don't really find that interesting. I don't really care. I just don't care. If you're a bear, this is your sell zone. And that's all that matters if you're a bear. And it spiked up, but whatever, dude. Okay, so there's only two outcomes here. The other outcome is like this. So if you're a bull, I doubt you'd be trading this pair. Honestly, like, dude, there's no bulls here. I mean, let's get to the heart of the matter here. There's no bulls on this. Absolutely none. So you took profit and got out here. Okay, and now you're going to short here. And that's that. If you don't short there, it's going to force more exits. See, this is an exit for a bear, not an entry. And I don't believe there's any bulls. So, like, look, here's one exit. Okay, there's another one, probably actually a little higher. Here's the second one. I'll put up here. Exit. There's only exits. And then this is an entry. I'll put sell because it's less letters. And then this is a sell. That's that. That's it. It's done. Done. That's it. Okay. Sure know what I'm talking about? So there's something going on with South Africa there. Now we look at a similar trade, and I'm short this one. Okay. This, my friend, is the daily 21. And it fell, and it's supposed to fall. So I'm done. And the way I'm reading this right now is something like that. I know that's not parallel. Don't get mad at me. All right, I'll fix it. Gee whiz. Is it more like that? Well, you know what? Why don't I fix this one? And I'll make it parallel that way. Okay. See it burnt? Yeah, even exotic dancers have meetings, huh? Private dancer. Dancing for money. So anywho, so you can see that that's much more related to the rand than it is to exotics. It's not a dollar issue. In fact, weak dollar should be benefiting South Africa. So something else is going on there. And if you're trading South Africa, you should know these things. Whatever it is. I don't know. Look, I don't follow South African news that much. I don't. Sorry. I love South Africa. So something happened. I don't know. Check the news. Check the central bank. But you might trade ZAR. I'm trading peso. Okay. Still up about 400 pips profit. And now I'm at 37.5%. Right? In interest. 37.5% return on investment. Well, internal rate of return. Interest only. Plus almost 400% when you look at the absolute return, internal rate of return, which means asset appreciation and interest. 400%. Well, good enough for the girls I go with. Yeah, R7. Yeah. Yeah. R17. Well, I always sell at R17. All right. So that's that. Cool. Great. Fine. Okay. Pound is one of the stronger currencies. Taking it up north. Okay. Look. This is what's important now. You need to watch price's ability to make a higher high. I have it trapped here. How do you trade a trap? If you're a bull, you buy low. And if you're a bull, you buy a retracement, a higher low. So, do I care about the price now? No. Right? Mama ain't raised no fool. So the next move looks like this. I'll buy it at this price if it makes a higher high. So you can have it at 105, but I wouldn't buy it at 105. I would buy it at 105. You're like, what? You can buy it at 105, but I wouldn't buy it at 105. I would buy it at 105. The difference is if you buy it here, you're taking on a lot of risk. If I buy it if I buy it here, I buy it at the same price with significantly less risk. I want to leave you with a mantra. And then I will see you tomorrow on at FX Street. Unless you're in my day trading group or my swing trading group, then we will spend hours together today planning out December. So I would like to invite everybody to join FX Bootcamp and the swing trading group or the day trading group. Okay, here's the mantra. If you're a bull, you buy higher lows. If you're a bear, you sell lower highs. Okay? That even gets rid of double tops and double bottoms. That's the simplest mantra. So, is that a lower high? No. Is it a higher low? No. Now, the next part of the mantra, the next advance, is you can sell double tops. You could buy double bottoms. And that gets you into ranges. What I was saying in the previous mantra is that you can't Okay? You can't buy that until you get this type of scenario. Okay? The reason for it is there's a high probability of this. And that's why you do these things. Okay? Right? So you can get rid of, like, you don't trade ranges, you don't trade double tops. Okay? So look, that might occur, and this might occur, and this might occur. Which one? I don't know. Why don't you wait and see, and then set up the trade. Peace on earth, may the pips be with you. May your profits be above average. Again, if you're a member of FX Bootcamp and in any of the live trading groups, I will spend hours with you tonight, setting up the rest of December and ending the year on a positive note. For everybody else, I hope to see you tomorrow at Trade Non-Farm Payrolls Live number 200. The link to register for that is right there. Would you please register? And I'll see you when I see you. Have a wonderful trading day. I'll see you shortly.